Good morning, good afternoon, good evening. A very warm welcome to all of you who are joining our side event today on alternative approaches to collateral to increase rural women's access to finance. This event is jointly organized by the Food and Agriculture Organization of the United Nations, FAO, and the African Rural and Agricultural Credit Association, AFRACA. So today's event will offer a platform to discuss alternative approaches to hard collateral for sharing and managing risk that can help overcome the constraints women face in accessing finance. We'll share quite a number of country experiences and discuss insights on the challenges and gaps that limit the adoption of such approaches in practice. So my name is Tako Njiai. I'm Senior Gender Officer at FAO's Rural Transformation and Gender Equality Division. And it's really a great pleasure to moderate today's event. So first I would like to invite Lauren Phillips, Deputy Director, Rural Transformation and Gender Equality Division of the FAO, and Thomas Essel, Secretary General of the African Rural and Agricultural Credit Association, AFRACA, for their opening remarks. So let's start with Lauren. Lauren, over to you.
Thank you, Taco, and good morning from CSW in New York. Good afternoon to those of you, or good evening, that are joining elsewhere in the world. I'm very pleased to be here and to start this event today because the topic of today's event, which Taco just mentioned, is really at the heart of the work that our division in FAO does. Women, of course, play a vital role in agri-food systems. Last year, our team published a flagship report entitled The Status of Women in Agri-Food Systems, where we reported that more than 30% of working women in the world work in agri-food systems. And in fact, in low and middle income countries, this number can be as high as 66%, for example, in sub-Saharan Africa, or 71% in the case of Southern Asia. So agri-food systems are critical to women's livelihoods all across the world, but when it comes to reaping the benefits from their work, there's still a lot of inequalities that prevent women from participating fully and benefiting fully from agri-food systems. The conditions that women work in and the returns on their participation in food systems are unequal. And that's influenced, of course, by gender inequalities within households, within the community, and within the broader society. And we also know that women are more likely to suffer from shocks and crises, in part because they don't have access to financial products which might help them weather those shocks. So we know, for example, that food insecurity increased much more for women than for men during COVID-19. And in a recent publication that we published last week, our team found that there is a much higher impact of climate change on female-headed households than male-headed households. For example, 1 degree increase in long-term average temperatures is associated with a 34% reduction in the total incomes of female-headed households relative to male-headed households. So we're talking about very big losses that access to better financial products could in part help women offset, or could support them in adopting adaptive practices. And so we know that these inequalities that I've mentioned are inevitably reflected in and affected by women's constrained access to finance. While globally we see some improvement in the gap between women and men's access to basic savings, we know that in Africa, for example, where smallholders represent the bulk of the agricultural sector, women are receiving less than 10% of the credit that's on offer to small-scale farmers. We need financial inclusion to enable women to achieve their potential to participate fully in agriculture and in food systems. And of course, women need finance to put in place investments to sustain their livelihoods, grow their businesses, manage risks, smooth consumption, and provide the basic needs for their families and their households. And the lack of access and ownership of traditional types of collateral like land can make it difficult for women to obtain access to these loans. For example, in terms of land, we know that women agricultural landowners, or those that hold secure rights to land, can range from as low as 6.6% in Pakistan to as high as 57% in Malawi. But in most countries, men have much better access to land than women. And there are also a lack of legal protections for women's ownership of land in many countries. Nonetheless, right, we know that there is a lot of evidence that women are good borrowers. They can be an important client base for financial institutions. And so we need to overcome the sort of conventional impediments of collateral requirements in order to help women access larger amounts of credit, but also more sophisticated financial instruments. I'm really looking forward to hearing more about new approaches or alternatives to traditional collateral in today's event in order to help women access finance from group-based approaches using digital financial solutions or crop receipts. And I'm very interested and hopeful that these kinds of new approaches could be used at scale. Let me just close by quickly saying that the theme of this year's CSW is about investment in gender equality. And most of the sessions are focused on investment at the macro level, so increasing the amount of money that's going for gender equality. But if we do that sort of macro work, which would be fantastic, if increasing the amount of money that's available for gender equality without doing the work to make sure that women can access that finance, will only be sort of solving half of the problem. And so the kind of discussion we're going to have in this event today is very important for making sure that we finance the sector well and that the money reaches those who need it the most. Thank you, Taco. Over to you.
Thank you very much, Lauren, for giving us some insight from the FAO's report on the status of women in agri-food system and showing us the persisting gender inequalities in women accessing finance, but also some of the solutions that are highlighted to go beyond the macroeconomic level to also look into access issues. Thank you. So now I will give the floor to Thomas Essel, Secretary General of AFRACA, for the opening remarks. Over to you. Thomas, I think you are muted. You are muted.
Thank you very much, Taco, for this opportunity, and to FAO for initiating this all-important topic on alternative approaches to collateral to increase rural women's access to finance. Collateral is an item of value pledged to secure a loan. It reduces the risk for lenders, but puts a burden on the borrower. If a borrower defaults on the loan, the lender can seize the collateral and sell it to recoup its losses. For borrowers who do not have it, the door to access finance may be shut. This is the case for rural women. Societal structures of many countries are disproportionately biased against women, especially in terms of ownership of assets that can be used as collateral. This limits their business development. Women-owned businesses across the length and breadth of Africa and other countries face a range of challenges in accessing finance. More than 90% of women micro-enterprises in sub-Saharan Africa cannot access affordable financial products. This has led to a gap of 42 billion finance gap for women entrepreneurs, according to AFDB. And this is a situation that we must all address. And this is why the topic for this webinar is important. Distinguished participants, rural women are hardworking and so deserve special attention from lenders and key stakeholders to make them more productive in their businesses. There are already some initiatives by banks in Africa and elsewhere to ease collateral use, in addition to new approaches. As first step, some are developing non-conventional collateral approaches targeting rural areas. Example, using cows and goats as collateral. The Reserve Bank of Zimbabwe, which is the central bank, has recently included a wide range of movable assets to be used as collateral, including gold coins and livestock. But at the heart of the motivation for banks to support women's SMEs without collateral lies their ability to shift their approach from a one-size-fits-all collateral to an alternative that provides more personalized experience, demonstrating a better understanding of women businesses. Once banks can understand this, then the prospects of helping achieve alternative approaches to serve women becomes brighter. Second, banks are actually leveraging on new initiatives, such as product innovation and technology, use of alternate data, partnerships, and risk-sharing approaches, among others, to achieve the twin objective of creating more access to women businesses and expanding their profit base. In Kenya, banks have special products targeting women in fish trade and other women business groups. The African Development Bank's affirmative finance action for women in Africa, AFRACA, is also reaching out to many women in Africa. In the absence of traditional financial data and scorecard models, some banks are exploring the use of alternate data, which enables them to use advanced analytics platforms to build better digital credit assessment models. Using this, they are able to see specific risks, identify cost-effective channels, and bring out their innovative capabilities, thereby minimizing collateral use. Collaborating partnership with ecosystem players is also ongoing, and collaboration with development partners, funders through blended finance to lower the cost of borrowing for women entrepreneurs is also growing. As I speak, I will want to say that these are efforts that are good and must be intensified. Adoption of risk-sharing schemes, including insurance, that have special products for women entrepreneurs' access to finance, can reduce their vulnerabilities and protect businesses against economic shocks. Here, the African Guarantee Fund can provide credit guarantee facilities to financial institutions in Africa that give loans to women enterprises. As I conclude, I must say that much of the call to increase rural women's access is on lenders or banks to adopt these alternative approaches, which are client-centered to meet the needs of women entrepreneurs. But I must hasten to add that banks, which are supposed to help the women, should also be incentivized through partnerships to be able to do this, and that a complementary role by governments, development partners, women themselves through skills enhancement and affirmative action would make this dream of adopting alternative approaches to collateral lending at affordable cost a reality. I look forward to a robust discussion on this topic. Thank you very much for your attention.
Thank you very much for these very inspiring opening remarks that remind us that rural women are hard workers. So the problem is not rural women, it's rather the ability of the banks to understand women businesses and also to provide services that take full cognizance of women's challenges in accessing the assets. And I think it is really reassuring to know that there are many tools that are already there and already applied by a number of institutions. and we will be learning a lot more from those tools as we move forward in the session. So thank you. I think both of you have really provided us with a lot of inspiration to kickstart the rest of the session. Thank you. So before we move to the presentations, I would like to say a couple of words on housekeeping for this virtual session. We will have 3 distinguished speakers who will make presentations for about half an hour. This would be followed by a panel discussion for about 20 minutes, and then we will open the floor for questions and answers from the audience. We'll have in total 90 minutes for the entire duration of the event. Please note that the event is being recorded, and should you wish to get a copy of the recording, please email my colleague Melina Archer. Melina's email address is being put in the chat. So we also invite you, as the session goes along, to submit your questions in the Q&A space. So thank you very much. There is interpretation in English and French as well. So now let's move to the presentations following the opening remarks. So I'm really pleased to welcome our first presenter, John Amimo, Head of Programs of the African Rural and Agricultural Credit Association, AFRACA, based in Nairobi. So John, you have held managerial positions with a range of public and private sector institutions, including AFRACA, the Kenya's Commodities Fund, and the Canadian-based Financial Alliance for Sustainable Trade, FAST. So can you please tell us about the potential of collateral substitutes to help overcome constraints posed by the lack of conventional collateral in financing agriculture with a focus on rural women? So the floor is yours.
Thank you, Taco. Thank you for those kind.
Cannot hear you.
Thank you for the opening remarks from the Secretary General and the first speaker at the stage for this. Yes, Taco, can you hear me?
Yes, we can hear you. Thank you.
All right, great. Sorry. Yeah, I have quickly moved to the second slide because I know of the time constraints. So I will go directly to the key challenges facing rural and agricultural finance. This is very broad, and some of them have been shared by the early speakers. So I think the challenges, as we know, are quite numerous. At farm level, we know the challenges: rain-fed agriculture, lack of affordable inputs, lack of penetration of mechanized production, low prices, post-harvest losses, name it. I think those challenges are there, and we are aware. At policy level, the challenges have remained, I can say, stagnant for some time. Unpredictable government policies, ad hoc policies coming up every now and then when we have new governments, lack of supporting legislation, and most importantly, at the bank level. The banks represent our local funding sources. And this is where most of the need, the financial need, should be coming from. But again, we still see challenges from the bank until today. They lack understanding of agricultural markets, large distances between bank branches, high perceived risks in financing in agriculture, lack of long-term funding. These are all challenges that are plaguing the rural and agricultural finance space. The challenges even become more complex when you bring in the issue of gender-based lending. I think given all these challenges that are there, when you go to a bank and you tell them, can you tailor appropriate financial products for women, it even becomes more complex. But again, we are aware that there are alternative approaches to lending. Alternative collaterals have emerged. Financial institutions, as we know, they rarely target women's needs and generally lack the experience and knowledge to tailor appropriate financial packages for women. However, there is growing evidence that shows that institutions offering financial packages targeting women-led SMEs are emerging. There are certain alternative collateral options that I would like to speak about that do not necessarily need a lot of policy re-engineering. I think these are plug and play. We've seen them work in our markets. One, I think, which is very, evident is the pay-as-you-go model. Pay-as-you-go model has been used very widely, especially in the renewable energy sector, solar energy sector. I like the model because it can be easily adapted for the agricultural sector to enable women acquire farm assets like machinery that can help them procure or increase their productive role at farm level. Another area of importance is trade. We all know that women participate more in trading activities along very many value chains. I'm very optimistic, and I think I've been optimistic for the last couple of years when the concept of the AFCTA, African Free Continental Trade Agreement, was developed. I think this brings a new sense of optimism, more in expanding cross-border trade, and also to help in structuring trade in African countries, especially because trade in our countries is highly informal. Structured trade, I believe, will attract structured finance. I think many banks, even from where I sit at AFRACA, our member institutions always want order. Banks, as you know, they want to see some order before they put in the investments. So with structured trade, I believe there's new hope in financing women. Policy considerations, promoting character-based lending, and I think my boss, the SG, mentioned a little bit about this. There's usually a general perception, most policymakers, always perceive that women require low-cost financial packages. I don't think that's true. I think given the right incentives, the right, considerations, women can become good borrowers, and they have demonstrated, that women can become good borrowers. I'm really excited about technology currently in the sector. The fintechs and the so-called agri-techs are developing very innovative credit scoring solutions that are making it easy for some financial institutions to provide credit to women. Unfortunately, a lot of these solutions have not been scaled up. Most of them are still being delivered through non-traditional lenders, which is a good thing in our sector, because I think the banks have been there for quite a long time. It's high time we start seeing new competition, new players coming into the market. And the fintechs are actually coming up with very competitive solutions and with very good value propositions, relying mainly on credit scoring, character-based lending. So this is an area which I'm very excited about, and I hope it scales up in the coming years. And then again, repurposing public resources through existing institutions, DFIs. I think efforts should not just be limited to leveraging private sector capital, but other considerations need to be taken to ensure inclusivity. For instance, by focusing more efforts on gender issues in priority areas like trade, what I mentioned earlier, in future, attempts to build resilient food systems through intra-regional food trade. And again, providing incentives to financial service providers. Incentives have been there, credit guarantee schemes, name it. They have been there. Tax rebates, but I think there's need for rethinking of how we incentivize the market, especially targeting women. And then the big elephant in the room, and that is land. For us in Africa, I think you know, we are very much attached to our land. Land has been the traditional collateral instrument for quite a long time. And it still is, I have to say, whether we like it or not, land is still somehow king to most financial institutions. But to unlock land as collateral, there needs to be more work in advocacy, more land reforms. Governments need to consider property rights for women. I think this is very pertinent so that women can have ownership in the lands that they're farming. And this will help in unlocking finance. There are quite a number of examples where this has worked. The land bank in South Africa, I think they're very prominent in the land banking model, and also land reforms. One last thing, the last bullet I'd like to talk about is generating gender-based data to develop appropriate policies. And I think that is where most of our governments lack. You know, there's very limited research on gender-based data to help in the policy formulation of women or alternative collateral approaches. So we need to conduct more baseline and scoping studies to better understand the profile of women and their financial needs within their respective context. That's the last thing I wanted to talk about, research. So I finished on a research note. We need to do more research so that we can understand the profile of the woman and what their financial needs are, so that we can tailor appropriate financial packages. Thank you so much.
Thank you very much, John, for sharing quite a number of insights and on critical bottlenecks and gaps, but also some of the solutions and areas that we need to look at. I will retain that we need also to go beyond finance, also look at different sectors. You mentioned the trade, and I'll retain that structured trade for structured finance, that's a necessity. So you also mentioned land, and you invited us to engage not only the private sector, but also public finance. And you've also emphasized the importance of data and research. So thank you very much for all the insights. So now I will welcome our next speaker, A.G. Nafziger, Gender Equality and Social Inclusion Specialist at the Mennonite Economic Development Associates, MEDA. So Aya, you bring 10 years of experience applying a feminist and intersectional lens in the international development sector, working in many regions, including Latin America, Asia Pacific, and Africa. So can you please tell us about MEDA's integrated solution to financial inclusion of rural people and the focus on the economic empowerment of rural women? Over to you.
Great, thank you so much. And hello, everyone. A good morning, afternoon, and evening to all of you, wherever you are in the world. I'm very happy to be here. As was mentioned, I'm AJ. I'm a Gender Equality and Social Inclusion Specialist at MEDA. So for the next 10 minutes, which is a brief time to fit in a lot of information, as I'm sure my fellow panelists feel the same pressure, I'm going to give you a brief overview of MEDA's experiences with gender-sensitive solutions to collateral constraints experienced by rural women. Advance my slide here. So just a brief introduction to MEDA. MEDA's mission is to facilitate business solutions to poverty. We do this through strengthening agri-food market systems by supporting agribusinesses, farmers, cooperatives, financial intermediaries, and other market actors to work together to achieve the economic empowerment of rural women, men, and youth. And we do this by strengthening these systems. We provide technical assistance, smart incentives, innovative investment mechanisms, and facilitate network and alliance formation. So here I just want to present kind of the challenge we see in inclusive finance, particularly for rural women. So there are two main considerations when it comes to increasing access to finance for rural women: power dynamics in the sector and non-financial factors that influence financial decision-making. And both of these have implications for alternative collateral. Regarding the power dynamics in the sector, the fact of the matter is that traditional products were designed by men for men. Because of patriarchal systems of asset ownership and inheritance, men have more access to land, which became the go-to form of collateral because men are also traditionally seen as the consumers of financial services, especially credit. As was mentioned, for centuries, credit was given based on a person's reputation and character. So the idea of creative ways of assessing creditworthiness and assessing risk is not new. This is not a new concept. And when women have more power in the sector, we believe that the appetite for alternative collaterals will increase. Also, women's access to traditional forms of collateral will increase. The other major consideration that I want to point out is the support for rural women in their ecosystems and considering the non-financial factors that contribute to financial decision-making. So through needs assessments, MEDA works to understand these power dynamics within households and in markets in which rural women are operating. Gender roles, for example, impact women's abilities to access credits because they are not seen as the provider in the household. Gender-based violence interacts with access, use, and control of financial services, and that it increases under economic distress, as we saw with COVID-19 and was mentioned in the introduction to this session. But also when women are unable to access credits due to their lack of assets, they're more likely to be economically dependent and unable to leave violent situations. Unpaid care work also affects financial decision-making because women are traditionally seen as the ones responsible for unpaid care work, which leaves little time and resources to access credits to invest in their businesses. And finally, rural women's businesses are much more likely than men's to be informal, which makes accessing financial services even more difficult or possibly impossible. Financial service providers must consider more than just business performance and traditional collateral options to expand their reach to rural women. They must also take into account the additional factors that affect women, such as gender roles, gender-based violence, care work, and the informality of their businesses. So next, I'm just going to share a couple of experiences that MEDA has in addressing these challenges of improving financial inclusion for rural women, and in particular with non-conventional forms of collateral. So first, in 2015, under an FAO project in Zimbabwe, MEDA collaborated with Viral Microfinance Institution to enhance smallholder farmers' productivity by developing a rural outreach strategy, which was focused on extension services and financial access together. Market research that we conducted in Mutasa District highlighted the potential for non-conventional collateral to improve credit access for women smallholder farmers. And it really revealed a significant demand for loans among individuals, especially young individuals between the ages of 26 and 45, with women facing more substantial collateral challenges than men. The study showed a preference for using farm equipment and livestock as collateral over traditional assets like land or houses, which was particularly difficult for women and youth to provide. Something that was particularly interesting about this project was the focus on the research and understanding the needs before we went ahead into product design. But as a result of MEDA and Viral's market research and the project, Viral developed 4 loan products that enabled livestock, household assets, and purchased equipment to be accepted as collateral for loans. And the purpose of these loans included agricultural inputs, purchase of small assets where the asset itself was served as a collateral, purchase of stocks for resale, and personal and medical use. By the end of the project, Vero grew by well over 1,000% in their clients and achieved a 2,000% increase in the value of its portfolio. So this was clearly a win-win situation. This experience is a great example of the potential for business growth when products and services meet the needs of both women and men clients and also for youth. Another experience that MITA had in regards to non-conventional collateral was in Bolivia. We had a small project there where we looked into providing non-conventional collateral options to manage the logistics to make accepting NCC as a viable option for financial service providers. So for example, recouping assets such as land and buildings is much more straightforward than livestock or equipment. So we worked with CEDRE Development Finance Institution in Bolivia under the Innovate project, and we developed a prototype for a collateral registry to improve credit access for individuals lacking registered assets such as land. So this initiative aligned well with Bolivia's regulatory environment, which supports the use of non-conventional collateral or NCC, such as livestock, agricultural equipment, and the use of household assets for securing loans. And they have a recent financial services law, Regulation 393, which recognized NCC as valid loan security and mandates the creation of a collateral registry. So with MITA's support, CEDRE created a registry system, a prototype, aiming to expand it nationally with the support from the central bank. Unfortunately, this project happened the year leading up to COVID. So as far as I'm aware, this has been delayed, but the prototype set the stage for important conversations and collaborations between development financial institutions and the central bank in Bolivia. MITA has also developed a gender mainstreamed ESG framework, which supports financial service providers to identify these win-win scenarios where they can improve their institution's triple bottom line, achieving economic, social, and environmental impacts. And this tool, which I won't spend much time on today, it's called the Gender Equality Mainstreaming or GEM framework. It's available on our website. While recommendations developed for each financial service provider is customized, a common theme is addressing women's collateral constraints, and recommendations around this often point to peer lending, equipment or asset financing, or the development of credit scoring mechanisms to improve access to credits for women.
Okay, thank you very much.
Oh, sorry. Yeah, go ahead. Is my time up?
Yes. Did you want to finalize quickly?
Sure. Let me go to my last slide here. So just to wrap up some key takeaways that we have from our experience. So we learned that NCC is a viable form of security for loans, especially beneficial for women and smallholder farmers who often lack traditional collateral forms. To back that up, a registry system and regulation is important. The regulatory framework makes the use of NCC a viable form of collateral. Also, there's a triple exclusionary bias that impacts agriculture smallholders with uncertain market access and also women who lack traditional forms of collateral. So we really urge financial service providers to acknowledge this triple exclusion and design products that work for rural women. While they might not have access to land, they do have access to alternative non-conventional forms of collateral to offer as guarantee for loans. I'll leave it there. Thank you.
Thank you. Thank you very much, AJ. We'll have more opportunities for you to expand later on. Thank you for these really interesting experiences that have true potential. I think the examples you gave on Zimbabwe and Bolivia are really inspiring, and you've challenged us to also look at what happens within the household in terms of the intra-household power relations, go beyond the male breadwinner bias, and design products that really respond to women's needs and priorities that are based on a knowledge of such needs. Thank you. So I'll now turn to Leonor Gutierrez Fernandez. Director at Women in Agriculture Initiative, or Fruit Capital, which is a non-profit that invests in small and growing agricultural enterprises to transform rural communities. So Leo, you are an expert working at the intersection of gender equality, impact investing, and global development. You lead Root Capital's strategy to advance gender equity in the impact investing space. So can you please share the approach of your organization for integrating underserved populations, such as rural women, into capital markets, improving their access to finance and investment? Over to you.
Thank you. Thank you so much, Taco. It's really important, I think, to have this conversation, and I feel very honored that Root Capital is part of this conversation. Just for a little bit of context, Root Capital is a non-for-profit that has been working for 25 years on credit and capacity building in different countries globally, what we now sometimes call the Global South. That is a term that it's a bit problematic. I'm Costa Rican and I'm calling from Costa Rica, but we do serve different kinds of agri-enterprises all around the world. And what we see in these enterprises that could be privately owned or also cooperatives is the potential to elevate platforms for good, platforms that can really bring prosperity and welfare to the households of different rural communities around the world through a joint effort in producing crops and, having like this good agribusinesses working and running. Just to give a little bit of context, the program that I am directing has been around for 12 years. And I think that's important to mention that one of the main decisions that Root Capital did back in the day is that it was not only going to segregate data by gender, but it was also going to include gender indicators in what we call our impact scorecard. So that's very important because it's the direct way that we choose our clients. So we choose our clients based on their high additionality, meaning that it's really hard for them to find finance anywhere else, but also on them being highly impactful. And one of those indicators, alongside with increasing revenue for the people associated with the business, supporting climate action plans or climate resilience plans, and also gender inclusion is very much present in the scorecard that accompanies each one of our loans. And that's, I think it's very important to mention. And as you see, through this journey, we have learned a lot. This journey has taken us to have more than 1 billion investments and to define a portfolio that is very much gender inclusive. We have defined that we should have a portfolio that is at least 50% gender inclusive and 25% women-led. And to give you an example of how does this work, we had findings after analyzing the data from this portfolio that gender inclusive and women-led enterprises have more stable revenue. Women-led and gender inclusive enterprises are very fast growing. Financing gender inclusive enterprises catalyzes action to additional financing, and enterprises led by women and with more women employees have lower default rates. And last but not least, loans to women-led enterprises and those with greater participation of women are more profitable. I invite you all to take a look into the full report. It's called the Inclusion Pace Report. It's available in English and Spanish in our website, and that could provide more data regarding why is that Root Capital is bringing it all in when it comes to investing for women inclusion and investing in this gender inclusive and women-led enterprises. At the end of the day, we don't have, the capacity of a big bank, but we do see ourselves as lighthouses for system change. We feel that the size of our portfolio, the size of our investments, and all the lessons learned through the capacity building, technical assistance, and advisory services that we provide our clients put us in a position where we have something to say. And basically, that thing that we have to say is that investing in women is good business. And it's just important to find a ways to access this women-led businesses and just to bring this credit and this capacity building to them in a way that makes sense for the whole system. So just to give you a little bit of data on the numbers, last year we disbursed $101.6 million in gender inclusive businesses. 58% of our clients were gender inclusive, 29% of our clients were women-led, 86% of our total portfolio committed to gender inclusion policies and programs. And this is a result of a very intentional effort through our gender equity advisory services, that are services that we have installed globally, and that we have seen our clients taking over and really making progress regarding their commitment to inclusion policies and programs. We have 38% of advisory training participants being women, and 37% of the farmers that we reach through our programs are women. So how does the collateral approach work for Root Capital? So what we do is that we use a model that we call triangulation. And it's basically that we sit down with our client, with a buyer and Root Capital, and the buyer commits to buy our client's harvest, and they commit to our price, and they sign a contract, and with that contract, Root Capital is able to facilitate these loans. This triangulation process has worked very well for many years, and it's a way that we find it's an opportunity for us to really support our clients on a very critical time of harvest, when a lot of capital is needed so that the whole process can be positive for everyone. And of course, the income increases when you have enough capital so that you can sell and export and have, like the kind of buyers and clients that we really want for the people that we work with. Just a very short reminder of why collaterals matter, but I think that we have already talked a lot about them, so I'm not going to stop here so that we have more time. But just to explain very briefly, we are able to do this because we have two types of investors, and that is how we call our model a blended finance model. So basically, we work with impact investors that are able to provide the lending capital that we need for our credit operations, but we also have philanthropic funding that supports our advisory services, our technical assistance, and our building capacity. And this is important to mention because some of our clients need accompanyment for a couple of years through capacity building before they are export ready, before they are lending ready. And I think that nurturing the capacity within the cooperatives, within the agribusinesses is an important step. And it's a step that pays off very well along the line. And I just want to mention here, because I think that when we see that the model has somehow not only to have collateral, but also to have other kind of services that support the inner structure of the businesses that we're trying to impact, it's important to think a lot about collaboration too, and how we can collaborate with each other so that we can provide, as it's been mentioned also, a very client-centered approach so that we can really support these businesses. And I think that for Root Capital, it really helps the idea that these businesses at the end become platforms for good and platforms to really bring prosperity into these rural communities. I have two examples for you, and that will be the end of my presentation. The first one is APROSELVANOR, is our client in Peru. It's a very exciting client because it's led by a female leader, and we have been working with her for the past 6 years. At the beginning, we were only working with this business through advisory services and capacity building, and little by little, they start integrating more smallholder farmers, mainly women, and the business became more robust. The quality of their coffee increased, the capacity of their farms as well. And as a result of that, this business has been securing loans since 2020 that range from $100,000 to $500,000. And I think it's important because we see also how the loans increase, and that is directly related to how the business has increased and how this community has increased their income, which is at the end goal for this kind of work. Something else that we have seen is that, and it's been mentioned here as well, is the need of how you can bring all the inputs that are needed for appropriate farming, especially when we're talking about climate resilience and how we can bring that to farmers. So for this client of ours, AfroSelvanor, they find the way by establishing their own credit facility within their premises. And this credit facility has a female name that is únicas, that means unique in Spanish with an A, it's a female unique. And the main purpose of this credit union and savings is, again, to be able to bring this kind of inputs directly to the farmers. We are very happy to see that they have been working in the Women's Association that is behind these únicas on how they can support entrepreneurial activity that will support off-farm work. So when we are not on season and all those months along the year where farmers don't get any income from their harvest, how can we support this entrepreneurial activity? And for this client, it is with guinea pigs, and they have started the commercialization locally of guinea pigs, and they have been doing very well. So we thought that it was like a really good example to share with all of you. And
Thank
again,
you.
all of this comes from that. And the last one is Pacayán in Honduras. And again, this is like a really interesting example. It has an impressive 67% of its board being women. And again, since 2018, we have been able to loan to this client between a range of 500,000 and 2 million using this kind of collateral approach. Thank you so much for your time.
Thank you very much, Leo, for reminding us that investing in women is a good business. And for sharing the insights on the triangulation collateral method that Root Capital has, but also its practical applications, for instance, for women in Peru and Honduras. So thank you very much. I think we've heard 3 very interesting presentations, very engaging, that will inform the rest of the session. We are now moving into the panel discussion. And I'm delighted to warmly welcome 2 more experts who will join the panel. And maybe just a reminder that for the panel, everybody would have 3 minutes, no more, so that we can finish on time. So the 2 additional panelists that we're going to welcome now are Linda Jones. Linda is a gender inclusive finance expert and international consultant. And we also have Azaratou Sondo Nignan, who is the general director of, she's the general director of the umbrella organization of credit unions in Burkina Faso. So maybe let's kick off with Linda. So Linda, you were known for your extensive work on gender inclusive market, but also sectoral and financial system development with a significant focus on agricultural value chains and rural finance, having designed, launched, and managed various inclusive programs globally for over 20 years in Asia and Pacific, Africa, and the Middle East. So what are your insights, your highlights from what was presented by the 3 speakers today? Over to you.
Yeah, thank you. Thank you very much. I appreciate the introduction, and the presentations were great. I think there were a lot of really good examples, and that was good to hear. And I very much like Leonor's comment that a lot of the work that's being done at the ground level is really the lighthouse for systems change. So in order for this change to become sweeping and really solid, we need change at various parts of the system. And so I would like to kind of build on a couple of things that people talked about to exemplify how some of this is happening now at the systems level and quite rapidly and dramatically. So John gave a great example for pay-as-you-go and talked about utilities. And what's happening in one program in financial sector deepening Uganda is that pay-as-you-go is being leveraged for micro insurance for health. And this is very relevant to rural women and women agriculturalists because a health incident can be catastrophic for the finances of the whole family, and savings that were set aside to buy agricultural inputs may no longer be available. So this model provides microinsurance with utilities, but if the utility bill is not paid, then the micro health insurance no longer will be covered by the utilities company. It's a really amazing model and is having huge impact and has had massive outreach to hundreds of thousands of women. So that's just an example of the kind of innovations we're seeing on the ground, building on some of these models you're talking about. Everybody said a lot about data. I cannot add any more to that. It's so critical, particularly since in a lot of countries, there's a lot of gender bias, unconscious bias. So to overcome that, we need solid data to demonstrate what good borrowers women are because they repay their loans. And then, but the area that I want to focus most of my time, which I'm not sure how much I've had, but is at the policy level. So an area where I've been doing a lot of work lately, which really will take advantage of all the learnings here, is the fact that the international and multilateral development banks are now getting really serious about gender equality. It's not a ticky box anymore. And they're beginning to invest in the national development banks. And the national development banks, as I'm sure you're aware, work very closely with government. So they're part of the whole policy setting agenda. And many governments are also receiving funding from large donors, whether it's FCDO in Africa or DFAT in Southeast Asia and the Pacific. And so this is all coming together to put considerable pressure from the top down for there to be more lending to women. And just to give you, for example, the European Investment Bank is investing in national banks in Africa and Eastern Europe and so on, and Asian Development Bank throughout Southeast Asia and the Pacific. So one program I've just wrapped up was working with the Micronesia Development Bank, who had received loan funding from the Asian Development Bank, and a stipulation of the Asian Development Bank was 50% of the finance, or 50% of the borrowers, not quite finance yet, which would be a better thing to shoot for. 50% of the borrowers had to be women. So FSMDB had to figure out how they could find viable borrowers. And then they realized they needed all of this change, particularly in their lending requirements and in their lending processes, the application forms, et cetera, and that therefore capacity building was needed for women, potential borrowers, they needed partners for that. So this kind of program is now beginning to happen in many countries. I'm just launching a program in Africa that will work in Kenya, Namibia, in Zimbabwe. And so this is beginning to happen. And I think this top-down push, along with a lot of the bottom-up support that's being provided by the presenters, well, at least AJ and Lenora. I know, John, you were also looking at the whole system. So I think that's very important. And I do feel this is a massive push right now. There's just a big tender out from the European Investment Bank to work with many national banks for gender inclusion. And when national banks have gender inclusion, this starts to impact all of the banks in the countries, and the government, because they're connected with the national banks, can start to put policy pressure on other banks as well. So I see this as a massively important thing that's happening right now, and it's really beginning to take off. So so that's all I'll say. I'm sure I'm over 3 minutes.
Thank you. Thank you very much, Linda. I think you've highlighted a number of, the importance of a systemic approach is very important, but also the policy processes and, the policy pressure that can yield quite a number of results at country level. You've also insisted again on data as a very important dimension and the benchmarking in terms of the requirements and also the processes. So thank you very much. I'll turn again to John. So John, I'll ask you a very challenging question. So do you have any information on additional flows of finance that would have been mobilized towards agricultural stakeholders thanks to the use of those alternatives, and that would otherwise not have happened. More specifically, do you have any numbers, any quantitative evidence on how those approaches are helping women access finance? Over to you.
Yeah, thank you, Taco. Yeah, like you rightly say, that's a very challenging question. And I'll just speak from Linda, and that's the issue about data. Data, I can say, is very challenging to obtain here. Much of the data around alternative collaterals, I think, has been generalized. So it's very hard to get, accurate disaggregated data on specifics. But one area which excites me, I think, is the impact investment area. I think that is the area where we've seen a lot of activity. I was just reading from the Brit Intelligence that out of the 10 sectors, leading a fintech, health and biotech, e-commerce, agriculture actually comes fourth. So agriculture has managed to attract quite new funding from impact investors. But surprisingly, I think one of the pieces of data which somehow made my heart sink was that a lot of the funding, out of the many deals that have been done, out of the 2,213 deals and over 100 million raised, I think 3.2%, or rather in volume, has gone to female or women startups. So that already can tell you that there's still a lot to be done, in terms of promoting alternative collateral to women. But also just picking up on something that Linda said, and also in relation to the impact and climate finance environment, is that I'm quite excited with what is happening with the climate discussions. The pledges that came out of COP28, the $1 million. What we are getting, the questions we are getting here at AFRACA by our members is, how can we access these funds? And I always have a simple answer to them. Like, if you want to access these funds, you need to be ready. And for you to be ready, you have to put in place some measures. You have to have the, ESG frameworks. You have to be compliant, with many of the climate finance, funds that are out there. So I like the fact that many of the institutions now are starting to put ESG frameworks in place. And a lot of the ESG frameworks also have a very strong social inclining, which requires them to lend, or rather to push some of the funding to women. So that, to me, will be my optimism for the sector. And we are doing quite a lot of work here in AFRACA, trying to make our institutions ready, to get these funds. So yeah, and I think once that has been done, I probably will start seeing more, data coming out, and yeah, and that's, I would just say, I'm just hopeful for the sector. That's what I can say.
Thank you, John. I think you've given us both a gloomy picture and also an optimistic one. So indeed, the monies coming to women are still way too little, too low. The data is challenging. How do we disaggregate the data? But also, you've given us some hope about the opportunities that might be provided by the impact investment areas, but also climate finance, where we know that there are a number of compliance requirements that have to do with social issues and gender. So thank you very much for that. You would allow me to just welcome our other distinguished panelists in French. Je vais maintenant me tourner vers Madame Azaratou Sondo Nignan, des unions de crédit au Burkina Faso. Voilà, Azaratou, vous avez occupé des postes de responsabilité croissante, allant de la création de banques villageoises améliorées à la coordination d'un programme de crédit et d'épargne, contribuant à la réduction de la pauvreté à travers la finance, en particulier pour les femmes et les jeunes pauvres. Voilà, soyez la bienvenue. Donc, je vais lire la question en anglais pour le bénéfice de tous et toutes. Et je vous prie de mettre votre casque pour la traduction. So I will say the question in English. So Azaratou, good alternative collateral is very reliant on external valuation, especially on what the lender believes to work well as a risk mitigating factor instrument. So you come from the financial sector. So how do you assess how good a particular alternative approach to collateral is? And based on your experience, what criteria should be used to assess this? Voilà, la parole est à vous, madame.
Bonsoir tout le monde. Merci de m'avoir invité à ce panel sur le thème assez intéressant d'accès des femmes et des jeunes au microcrédit. Au niveau de la Faîtière des Caisses Populaires, qui est une coopérative, un mouvement de coopérative d'épargne et de crédit étalé sur l'ensemble du territoire du Burkina. Et nous avons démarré nos activités en 1972 par la création des caisses populaires qui s'adressaient à l'ensemble des populations. Au cours des années 1992, on s'est rendu compte que la gente féminine était exclue du fait des distances qu'elle devait parcourir et du fait également du temps qu'elle devait mettre au sein de nos succursales pour pouvoir être servie. C'est ainsi qu'en partenariat avec Freedom for Hunger, nous avons développé un programme de crédit destiné aux femmes. Et à travers ce programme de crédit destiné aux femmes, ce n'était plus les femmes qui devaient venir vers les succursales, mais c'est beaucoup plus des animatrices recrutées et formées qui devaient rejoindre les femmes dans les villages sous des arbres. Donc, l'ombre des arbres servait maintenant au lieu de service de microcrédit où elles octroient du crédit, collectent de l'épargne, mais surtout renforcent les capacités des femmes sur divers thèmes d'éducation, que ce soit l'éducation en gestion des activités d'une manière générale, les activités économiques, que ce soit des formations ou des échanges sur l'importance de l'épargne et comment on pouvait la mobiliser, sur aussi la gestion des crédits, et sur la gestion aussi des maladies infantiles et sur le renforcement de la solidarité au sein des différents groupes. Donc, les animatrices avaient la charge d'animer tous ces thèmes-là auprès des femmes des villages. Et ces femmes devaient se mettre en petits groupes de 3 personnes à 5. Et ces 3 ou 5 groupes pouvaient se mettre aussi en grands groupes de 3 à 5 petits petits sous-groupes, donc de 15 à 25 membres. Et à partir de là, les causeries commençaient et les besoins de crédit étaient collectés. Et ce programme a été mis en place aussi pour un peu résoudre les questions de garantie. parce que dans notre démarche originelle, on priorisait les crédits axés sur des garanties matérielles ou financières. Et là, à travers le programme de crédit aux femmes, nous avons remplacé les garanties matérielles et financières par de la garantie, je dirais, beaucoup plus sociale, reposant sur la solidarité. Parce que dans ce que je disais tantôt, on a le premier niveau de solidarité entre les petits groupes de femmes de 3 à 5 et le deuxième niveau de solidarité à l'intérieur de l'ensemble du groupe de 15 à 25 femmes. De sorte qu'une fois que les besoins de crédit sont collectés, et chaque femme exprime ce besoin en fonction de l'activité qu'elle mène, et une fois que les besoins sont collectés, les besoins sont analysés et discutés avec l'accompagnement de l'animatrice, et les femmes se connaissant et évoluant sur les mêmes aires de vente, je dirais, savent souvent se challenger pour dire par rapport à l'activité que tu veux mener, si tu prends tel montant, ce n'est pas évident que tu puisses s'en sortir. De sorte qu'à la fin, elles arrivent à s'accorder sur des montants qui permettent non seulement à la femme de mener son activité, mais aussi qui facilitent les remboursements. De sorte qu'elle puisse, à la fin du cycle, non seulement rembourser les crédits, mais aussi récupérer son épargne. Parce que, comme je vous l'ai dit, c'est un programme de crédit à but beaucoup plus éducatif. Parce qu'au premier cycle, une femme pouvait demander un crédit de l'ordre de 3 000 francs. 3 000, c'est à moins de 3 dollars. Et elle pouvait aller jusqu'à 30 000 pour le premier cycle. Et au deuxième cycle, on faisait en sorte à ce que les augmentations n'excèdent pas 50% du premier crédit. Donc, c'est une démarche non seulement méthodologique, mais aussi une démarche d'éducation à la gestion financière. Et chaque semaine, il y a des causeries avec les femmes. Et au cours des causeries, comme je l'ai ressorti tantôt sur les thèmes, puisqu'il y a les thèmes liés aux maladies infantiles, les thèmes liés à la gestion de l'activité des petites entreprises, c'est-à-dire à la gestion de leur activité économique, et des thèmes liés à la gestion même de la vie en couple. Donc, chaque semaine, le programme était déroulé et au cours des programmes, il y a des leçons phares ou des messages phares que chaque femme ramenait à la maison pour pouvoir mettre en application. Et au-delà des causeries, elle faisait l'épargne. Au cours de la semaine, ce qu'elle a pu vendre lui permettait peut-être de faire 100 francs d'épargne ou 200 francs d'épargne. De toutes les façons, le montant de l'épargne aussi était laissé je dirais, au choix de la femme en fonction de ses capacités. De sorte qu'à la fin du cycle, les cycles durent 6 mois et 4 mois, souvent 10 mois. À la fin du cycle, une fois qu'elle a fini de rembourser son crédit, elle récupère son épargne. Et au sein du groupe, en plus de la caution solidaire, constituée des 2 niveaux de solidarité, elles ont, à chaque fin de cycle, elles se sont imposées un certain montant par femme à déposer dans un fonds de solidarité pour accompagner un peu la caution solidaire. De sorte qu'au cours d'un cycle donné, si une femme était en difficulté de paiement, ce fonds servait à rembourser son crédit, quitte à ce que par la suite, la femme rembourse le crédit pour que ça puisse venir abonder le fonds de groupe et ainsi de suite. Avec cette méthodologie, aujourd'hui, nous avons des femmes qui sont devenues des entrepreneurs parce qu'au fil des temps, on s'est rendu compte que les femmes évoluaient et les besoins également. Elles ont diversifié leurs activités, si bien qu'à l'intérieur de ce même programme, nous avons maintenant pratiquement 3 produits de crédit. Il y a le produit de crédit association de crédit intermédiaire. On a le produit de crédit femmes émergentes et on a le produit de crédit femmes commerçantes et avec des niveaux des montants de plus en plus élevés et aussi des garanties de plus en plus complexes, mais sans toutefois atteindre le niveau des garanties exigées dans le modèle de crédit classique.
Merci, merci beaucoup Azaratou. Merci, vous nous avez vraiment informé sur cette démarche structurante que vous avez d'organiser les femmes en petits groupes et de renforcer un peu cette garantie solidaire et également d'intégrer dans l'appui que vous donnez des formations thématiques. Je pense que c'est vraiment une démarche très intéressante. Merci beaucoup. So I'll now turn again to AJ. So AJ, given what you have presented earlier, as well as insights from the other speakers, what would be some key recommendations for policymakers in countries to promote the use of alternative collateral among financially excluded or underserved rural women? Over to you.
Yeah, thank you for this question. I think I began to say this in my presentation, but collateral registries I think are an excellent and important stepping point in making NCCs more available to rural women to use as collateral. In order to do that, we need to strengthen the legal and regulatory frameworks in order to help eliminate gender bias related to financial services being provided to women. The other aspect is incentivizing financial institutions to develop these products and services that meet women's needs. Examples of that would be alternative data-based lending, psychometric testing, payments, savings credit, and insurance. One thing that has been brought up a number of times throughout this discussion is developing special products for women or tailoring to women. But as I said in my initial presentation, I think it's really important to recognize that the whole financial sector and all of our countries that we're operating in were really developed for men and by men. And I think that we need to kind of change the way that we frame this discussion, that we're not creating special products for women. We're actually designing with our customers in mind and demanding data that will help us to design products that are tailored to specific needs, whether they be for women or for men or for women that are coming from dramatically different backgrounds. I mean, we know that women are not a homogeneous group, and they require different types of products and services in the same way that men do. Another thing to recommend for policymakers would be promoting digitalization and financial literacy to increase financial inclusion. It's also important for policymakers to incentivize capital market participants to take a longer-term approach and offer additional services to growth-oriented entrepreneurs, particularly women entrepreneurs. And this really helps create the right ecosystem for public equity for SMEs, and will also support the development of other non-traditional lending instruments. Also addressing information asymmetries and increasing transparency in the markets. Those are other priorities to boost the development of alternative financing instruments for SMEs. And just to note that there's World Bank research that indicates that when countries institute a national financial inclusion strategy, that really increases the pace and the impact of reform. So that's kind of a preliminary activity to get the process started.
Thank you, AG. I think you've given us even more insights. So now let's turn again to John. Sorry, Leo. We've heard John already. Let's hear from Leo. So Leo, you gave us a very insightful presentation earlier on the approach of root capital to women's empowerment through financial inclusion. And you had mentioned that at the Women in Agriculture initiative, you are currently also exploring other collateral alternatives for your financing model beyond futures contracts, such as the use of co-guarantors. So can you please describe this and what it entails, and what are the bottlenecks that limit your engagement in this sense? Thank you.
Absolutely. I think that one of the milestones that we face when we are using triangulation and contracts as part of our collateral is that contracts not always come at the right time. Like, it depends on the year, it depends on the market, and it depends on the crop. So for example, coffee and macadamia have been hit really hard this year. And being hit hard means that there's like more macadamia and coffee in the market than buyers are willing to buy. And that, of course, makes the prices of those goods go low. And that makes the buyers to be more resistant in committing to a contract, because they're also playing with the prices and they're also playing with the market and trying to see how they can gain more and where. And that process, when it's delayed, it sometimes make our clients not to be ahead of the game enough, or not to be, at a place where they have the credit available when they need it. So we've been seeing what could be a way where we can still work with triangulation, we can still work with buyers, that we see this as a fundamental part of our operation, but at the same time, valuing other things such as character. And that might be controversial, but from our lenders and even, at our risk department, we're considering this as part of our collateral, because we have seen that in these agribusinesses, especially for the clients that we have known for a long time, and that we're also supporting through capacity building, their word and what they bring to the table, their integrity matters. And sometimes that integrity is, as a guarantee of that loan to be paid off. Of course, us also knowing and being very close to our clients and understanding their business and their risk from a more closer perspective, we think that in some cases that could be as strong as a contract to be able to provide a loan, specifically on a timely matter, that in this market, time is really important.
Thank you very much. I think you've highlighted also the importance of the market, the prices. So it also touches on a number of other sectors and dimensions when we talk about financing. So thank you very much. You were all extremely informative. The chat is flooded with a number of interesting questions. Unfortunately, because of the time, we'll not be able to address all of the questions. So here is one question from an anonymous attendee who says, what is the role of transaction cost in the selection of collateral alternatives for both lender and women borrowers? So that is one question. Maybe I'll pick up another one and we'll see who is able to address that. So another question is, how long does it take for collateral initiatives, alternatives, to become a bank's internal habit? For instance, be mainstreamed within a bank. So I think those are two very interesting questions. I don't know who would want to pick up that. Linda?
I can jump in on the work I'm doing with development banks. So right now, having done an analysis of their lending to women, and so a gender gap assessment, and also then developing a strategy, we have to prioritize what their actions are going to be, and lending requirements and processes is a key action. And to close the loop on that, which I didn't do before, that involves collateral, because they recognize in order for 50% of their portfolio to go to women, they have to figure out their collateral issues. So they have our process for those identified priorities are 18 months. So that is our current plan. And I have seen in some cases, it can happen quite rapidly, because it's just really understanding what the alternatives are. Now, they will have to test them And, you know, so that will be part of that 18-month process, testing the different ways they're managing that, whether it's through digitalization of collateral or whether it's some form of just movable collateral, or in fact, just their banking record. You know, there's different ways they're going to look at doing that. So there are options, but 18 months is what we're looking at to have something more locked in.
Thanks, Linda. I see that Leo also has a feedback.
Yes, just very quickly to mention that we've seen when it starts working and when we're really operating as a lighthouse for system change, when we are in a market that no other lenders are at. And then in a matter of 2 or 3 years, we start seeing banks also getting into our clients' activities and getting close to our clients. And for us, it's like a bittersweet situation. But at the end of the day, we celebrate, you know, when the market is no longer only responding to root capital, but actually we have other lenders that are with us in the same communities, also supporting and creating lending products for our clients. We see that as a win. And we think that taking a step forward and proving that it's possible and it can be done, it's very important, because then others dare to follow.
So thank you. Thank you. It's important to prove that they work. And we had some indication of the 18 months that it might take. And AJ also has some feedback.
Just really briefly, this is actually in response to the other question, but I think just something to keep in mind, and obviously I'm coming from a gender perspective, not from the perspective of a financial institution, but I think it's important for financial institutions as well as policymakers to think outside of just the price of developing the product and think more about the benefits, such as the reach for that project, their reputation, increasing their market, and that sort of thing. So I think it's just, I would say there's an opportunity to step back and think a little bit differently about cost benefit analysis there.
Thank you very much. I think the benefit orientation angle is also a very important one. So I don't want to keep us too long, because we've almost exhausted the time that we had. Unfortunately, we'll not be able to respond to all questions this time, but we've taken good notes, and feel free to reach out to us after the session. I would like to invite all of us to give a big round of applause to our presenters and panelists who have really done justice to the important issue of alternative approaches to collateral to increase rural women's access to finance. So we'll now move into the closing session. And for the closing, I would like to give the floor to Judy Matu, who is the founder and National Executive Chair of the Association of Women in Agriculture in Kenya, AWOC. So AWOC is a woman-led nonprofit organization empowering female stakeholders to develop climate-smart agribusinesses. And Judy, you are also a multiple award winner and a member of several high-level decision-making and advisory committees and boards, both at national and also county level. So the floor is yours, Judy.
Thank you very much. I'm very excited and I've heard so much that has really resonated with what we feel, and especially being a representative from the groups and the women that work right from the grassroots. And I am very excited that we're having this conversation. It could not be more timely. And I want to applaud each and every speaker, the panelists. You have brought in so much insights, a lot to think about and push for, because advocacy is part of the work that we do. So I'll just quickly go through some of the points that were made. and of course recognize that financial inclusion is a critical enabler for achieving the Sustainable Development Goals by 2030. In fact, financial inclusion as a target, it is a target in 8 of the 17 SDGs on achieving gender equality. So we can see how important that is. Stringent tangible collateral requirements of finance providers can make access to finance for many agricultural actors difficult. Today, we have heard on the importance of developing alternatives to conventional collateral that are effective in mitigating the credit risk to the financial provider and are attuned to women's needs and conditions and can allow them to overcome the collateral barrier when accessing finance. Today, we have actually listened and learned and of course identified clearly some of the concrete examples that have been given at country level and even globally. I think that we have heard from our presenters today in ways that we have really, most of us identified and most of us are trying to work towards. So in his presentation, John spoke about alternative collateral options that can take off without the necessity of policy re-engineering, such as pay-as-you-go. That is commonly used in the solar sector, and the engagement of women in structured trade, as opposed to the informal trade. John also spoke about promoting character-based lending by enhancing and strengthening the credit reporting infrastructure. In countries with good credit reporting systems, you see some positive effects on borrowing, alleviating collateral constraints. He emphasized on the need for, I'll just mention 3, repurposing public resources through existing institutions especially that embrace gender-based lending. Also providing incentives to FSPs offering financial solutions targeting women, like tax rebates. Using land banks for allowing women to access land. That is something I want to get to Kenya as soon as yesterday. Generating gender-based data to develop evidence-based policies. Now, AJ spoke about integrated solution to financial inclusion of rural people with a focus of the economic empowerment of rural women. I am very, very concerned. I'm very interested in that particular aspect because that is exactly what we do. AJ discussed country experiences in Zimbabwe and Bolivia, where MIDA works to develop non-conventional forms of collateral and registries for non-conventional collateral. I think also the part where we look at women in a non-conventional way is the only way forward. Lionel spoke about root capitals approach, and you're doing a very good job for integrating underserved populations, such as rural women, into commercial markets, improving their access to finance and investments through triangulation. Collateral without accepting, collateral method accepting futures contracts for financing. We heard about applications of this approach among women in Peru and Honduras. Through the results of their work, Leo made a strong business case for investing in women. She said that women's leadership increases revenues, reduces employee turnover, among other benefits. Gender inclusive and women-led enterprises have more stable revenues. Women-led and gender inclusive enterprises are very fast growing. Financing gender inclusive enterprises catalyzes access to additional funding, and enterprises led by women and with more women employees have lower default rates. I can attest to that. Loans to women-led enterprises and those with greater participation of women are more profitable. It is very important to note that most of these insights have given us something to think about, something to work towards, And maybe just quickly also add something, especially around disaggregated data. I think, John, that is one of the areas that even as we talk about evidence, it's very important to have that kind of report to enable us have facts on the ground. I think I will stop that, but I will take this back to the moderator for maybe conclusion. All in all, I want to say thank you very much. I think this has been a very insightful, very knowledge-based, evidence-based. And I think especially the conversation that we're having during CSW, emphasizing gender equality. There's no better way in doing this than coming together and looking at how we can empower the rural women farmers within our countries, especially what Leonor said she's not very comfortable calling the Global South. So thank you, everybody, and it is a pleasure.
Thank you. Thank you. Thank you very much, Judy. And I'll join you to thank all of our speakers and panelists, all those who attended the session, many who are online, the colleagues in AFRACA and FAO who have organized the session, and all those behind the scenes to make this happen, the interpreters. So we thank you all. And as Judy said, we have a lot to think about and push for. And we have the SDG framework as an anchor to do that. So let's keep working together. Thank you so much. Bye.